Hi, I'm Tracy.
And I'm Lonnie.
And we're One Blessed Step. Today, we're going to be talking about 10 ways that you can save money on insurance premiums.
Oh, yes.
These are so important in these days. Like, I feel like insurance premiums have gone through the roof.
Skyrocketing.
Yeah, and even some insurance companies won't even insure you anymore.
Right.
It's so frustrating. So today, we're going to share our 10 best tips. So if this is a topic that you like, don't forget to give us a thumbs up.
Subscribe.
And subscribe.
Yep.
Yes, those are just wonderful ways to show us that this is helpful to you, and we hope that it blesses you. So let me go ahead and start with number one. So the first thing is to shop around and compare quotes. So what Lonnie and I do is we utilize a broker.
Right.
So our broker is amazing, and he will shop for all different types of companies. So he'll go through all the different companies. He'll kind of rearrange some things to see what we can get the best price at.
Yep. Yeah, and so that saves you the time to do that, and you put it on him or her for your broker to do that for you.
Right. So how does someone find a broker? Like, what are some ways they can do that? Through networking?
I think networking is how we found out. I imagine there's probably Google search, or you can find.
Yeah.
You can find people. That's insurance broker is the term.
And I also know that they have like aggregate sites where you can actually get a quote and everyone will come and give you quotes. We just like using a broker because he does the work, and because he does the work, he gets paid by the insurance company.
Right.
So we get great rates and he gets a commission.
Yeah, so he's incentivized
Yes.
to find a good price because those companies are going to pay him, right? So.
Right. And a broker is different than an agent. So your broker is someone that's going out and looking for the best deals for you. He's not he does kind of work as an agent sometimes. He helps us kind of to talk to the insurance company. So he does help, but he's not the agent. So if something were to happen, we'd be working with our agent with that company. So if we had, let's say, Allstate Insurance, right? So Allstate Insurance would assign us an agent or a claims person, and that's who we would be working with, right? So in the past, we've had some agents, right? So we've had like an Allstate agent, but all they would do is sell us Allstate products.
Right, which just tends to go up over year over year. You just see it kind of creep up. So we needed to check out and see what the prices were and try to find out why they were going up.
Yeah, so that's what the insurance game is, right? So insurance, the insurance company wants you to buy insurance from them, and then slowly over time they raise your rates.
They want you to stay with them forever.
Yeah, and most of us don't want to do the work. It's a lot of work to actually find better rates, right? Because you're constantly calling 10 different people and then they're calling you back, and it's just a big headache, which is why we use a broker. So we encourage you to use a broker. Go ahead and Google online for a broker in your area, and then maybe they can help you, because you want to find someone in your specific neck of the woods because they have more connections, more knowledge than just any broker that you would find, right?
You find a good one, you're going to have a relationship with that broker for a while,
right?
Even though you'll probably change insurance companies multiple times.
Right, and there's some, state restrictions like licensing and things like that. So you want to make sure that you hire a broker, or if you decide to get just an agent, like someone with a specific company, make sure that they have all of the right legally type things, right?
Right.
So I guess the first one that we were talking about was shopping around and comparing quotes. So if you want to do the work yourself, feel free to do it.
Right.
There is an aggregate. There are aggregate sites that you can use. Where you'll just type in what you need, and they'll give you a gazillion quotes.
Right.
We have used that in the past. It really hasn't really helped us very good, but I think it helped one of our friends. So one of our friends used it, and then she was able to get a pretty decent quote right away. So that was a good deal.
Which is always an extra thing on that. Just make sure you're comparing apples to apples. It's always kind of the same across. So they'll always try to spin that by changing things.
Yeah.
So you're not comparing the actual same coverage.
Right.
When you're shopping around.
Exactly. Yeah. So if you're shopping around for coverage and you want like 50,000 liability or something like that, make sure all your other quotes are like 50,000 liability. Make sure all your quotes are very much the same and you're comparing apples to apples so you know what the deal is, right? Because things change based on insurance. This video isn't going to tell you like how to, figure out insurance.
Yeah.
If you need a video like that, we can maybe share with you what we shared with our kids. That might be helpful.
Or at least a rationale behind it.
Yeah, so let us know in the comments if you want us to work on something like that. Otherwise, we're going to go ahead to number
2 is increase your deductible. So this goes along with kind of when you're out there getting quotes and stuff, is looking at your deductible. And your deductible is how much you're going to pay out of pocket before the insurance kicks in. So usually it goes, the lower your deductible, so the less money you pay, the higher premiums you're going to pay. So if you increase, like we're talking about, if you increase your deductible, your premiums go down.
So what's a deductible?
So deductible is the amount of money that you're paying. Say you get in a car accident or a tree falls on your house, and your deductible is $1,000. So that deductible is something that you pay first before the insurance company starts paying in the rest of it.
Okay. And sometimes an insurance company will take that off the top. Sometimes you actually don't have to pay the $1,000,
Right.
but they'll say, "Oh, your claim is worth $10,000, so we're only going to give you $9,000 because your
Right.
deductible is $1,000." So the deductible is what is basically your cost once an accident or something unfortunate happens. However, your premium is different, right? So your premium is what you pay like on a monthly, semi-annually or annual basis. So that's how much you're paying for the insurance. So premium is before an accident, deductible is during an accident. So hopefully that's helpful.
Yes.
So what Lonnie's saying is he wants you to increase your deductible. So if your deductible is $500, you can get a lower premium, like the lower cost of your monthly bill, if you increase your deductible to like $1,000.
Yeah. So it's a practice of, if you feel you're a really good driver, maybe you increase your deductible and you save that money and you put it in your pocket to cover that cost if you ever do have an accident.
Right.
Yeah.
So number 3, bundle your policies.
Oh,
so
yes.
if you
Bundle.
have multiple cars or you have a house or you have renter's insurance, sometimes if you work with the same company, they'll give you a discount if you bundle. So that just means that instead of paying, $500 a month for insurance, now maybe you're going to pay $300 a month for insurance for the same stuff because you're with one company.
They want all your business, so they'll give you
A discount.
a discount for covering everything.
Yep.
So number 4 is taking advantage of discounts. So ask. It never hurts to ask, because you might be able to get a discount because you're a member of an organization.
Or the military, sometimes you get discounts for that.
We've gotten good student discounts for the kids once they have become driving age, and you need every discount you can when you're insuring a young adult.
Absolutely. So number 5, maintain a good credit score.
Oh, yes.
A lot of insurance companies use your credit score to determine what type of premium they're going to charge you. Again, the premium is what you pay every month.
Every month.
Right. So if you have a good credit score, oftentimes you'll get a lower premium. I'm not sure why. It's just kind of what they do sometimes.
Another way for them to charge you more if they need to.
Charge you more.
Or they just feel like you're not worthy to pay it.
Yeah, I don't know. Like,
more of a
so
risk.
maybe they think, you're more of a risk if you have bad credit score. It's weird to me because I think they would just do it based on driving, but they don't, or based on,
past history.
crime history.
Yeah.
I don't know, crime
Where
in your
you
neighborhood,
are, where
right?
you
So, and I
live.
think they, insurance is a complicated
It is.
game. So it's not like, anyone can give you like the formula, right? The how to get the best deal. We're just trying to give you small bits and pieces, chunks of information that will help you lower those premiums.
Yeah.
So they know what they're doing and they're going to make money. So if you can help them make a little less money and save money for yourself, then hopefully these tips will be helpful for you.
Yeah.
All right.
So we are so I did it wrong. 6. I'm not sure which way it is anymore.
Doesn't matter.
Doesn't matter. So number 6, review and adjust coverage. So I have a annual discussion with my broker, and in the past, before we had a broker, we'd have a discussion with our agent.
Yeah.
Going, hey, how are we doing? What's it looking like? What's the renewal? Because you're going to get a renewal every year coming up, and in the last several years, it's definitely always been more. And so then you kind of have to strategize and look at what is your coverage and what makes sense, and adjust it accordingly, and see if that is comfortable enough that you can take those adjustments and save some money on your premiums.
Right. So when Lonnie talks about coverage, whenever you have something that you're insuring, you have to identify like what type of coverage you need. So sometimes that coverage could be like your liability. If you get in an accident, sometimes that coverage could be medical premium. Sometimes that coverage could be comprehensive, which is like your car too. So
Right.
you kind of have to understand the lingo of insurance companies. And again, we're not experts. We're just
No.
telling you what we know.
That's why we have a broker.
That's why we have a broker. And so basically what Lonnie's saying is maybe if your car is old, so you have like a car that maybe is 10 or 20 years old and you can afford to replace that car with your own money,
Right.
maybe you don't need comprehensive. Maybe you only need like liability,
Yeah,
right?
just cover
Whatever your
others.
state
Yeah.
requires. However, we're big on making sure that you have the right amount of coverage. So make sure you're talking to your agent, understanding everything that they're saying with you. So if you decide you don't want comprehensive and you're not going to cover your car, well, what happens if your car gets in an accident, right? And even if it's not your fault, what happens if somebody hits you, right? And then you can't afford to replace your car and they were underinsured, right? Now you got to go through the whole process of maybe a lawsuit
And
to
you
get
don't have a
money.
car.
And you don't have a car, right? So really think this through. It's very important for you to understand what kind of coverage you have, but a periodic adjustment of coverage based on age of your vehicle might be appropriate.
Right.
All right. The next one is number 7. So number 7 is you're going to want to install any safety or security devices that your insurance company is going to give you a discount for. So I know many people that if they have something in their car or on their phone, an app, where the insurance company can see if they are actually doing good driving practices. So
Yeah, it's like tracking your speed.
It is a little Big Brother. We
Big Brother.
don't do that, but some people do.
Yep.
And it really helps reduce their insurance. So if you don't mind it,
Yeah.
run with it.
Yeah, if you're a super safe driver, go for it. So number 8. Consider pay per mile or usage-based insurance. So these are alternate different types of coverage that say you don't drive a lot, and they have coverages out there that you can pay based on how much you're driving, right? And or using, and so then you don't have to. You may get a discount.
Yeah.
Yeah. So I haven't seen a lot of those, but I definitely have heard of them. It's just something I don't think we
used. Have before. So it's not necessarily like this where it's like cost per mile or usage based, but sometimes your premium is based on the amount of miles you actually drive.
You do
right?
declare that. You're
yeah.
right.
So sometimes if you don't drive a lot of miles, you might be able to get a discount, right? Or if you work from home like we do, you might be able to get a discount if you're not going to be out driving a lot. But what Lonnie's talking about are insurance programs specifically that you pay like based on usage.
Yeah.
So that's fascinating. We don't deal with that, but there are options like that. The next one is number 9. So avoid the small claims. So if you like are backing out of your driveway and you hit a tree and you just got a little dent in there and you're okay with that dent, we're not okay. So first of all, this is never going to be financial advice. This is always entertainment purposes only. However, I would tell you that you may want to if it's just a scratch, you may want to let that ride, right? Otherwise, if you make a lot of claims, your rates are going to go up.
Because that'll go against your record for the renewal. So they'll make note all the time, the times you've actually claimed these small things, and when it comes around, they go, well, they're gonna keep doing this. They've set a habit.
Right.
So what Tracy's saying is and that can add up and pop your insurance up, and it'll follow you because that history will still go even if you change. So you're not gonna be sneaky,
connected.
like, oh, okay, well, I'll do this, and then I'll go to another one. It's like, no, they're gonna have that history as well.
Right. So Lonnie's basically saying that all the insurance companies have this database where they have access to your information. Yeah. So if you're the type of person that chips your windshield and you don't have windshield coverage or whatever, and you do a claim for that because your deductible is so low and it doesn't make it, it makes sense for you, right? Then they're going to increase your rates.
Yes.
So it's especially important, speaking of your windshield, we actually like the glass deductible because in Arizona we get rocks kicked up onto our windows all the time. And so we're always ending up with stars or cracked windshields. And so we have that extra insurance. It's called full glass replacement. And you can use that for the chip windows. Now, I don't know, do you know if you use that too much, if that causes any kind of increase?
I have heard that from our broker that there are instances where they will look at, like, if you're doing a lot of a lot of windshield replacement. I don't think the chips are a big deal. They see chips as you mitigating
the risk,
risk and the cost associated
full
with
windshield.
a full windshield. So they're happy. Insurance man is happy about that. But if you you replace your windshield all the time, I think that's going to ding you.
Right.
And that'll follow you.
Yeah, I mean, so do what works best for you. We typically won't put a claim for anything. We'll definitely won't put a claim in for anything that's close to our deductible.
Oh yeah.
So like if our deductible is $500, but the fixed is $400, well, obviously we're not going to claim that.
Yeah.
That would be just begging for them to increase your rates, and you're not winning there. But if you get something that maybe is like $2,000 and your deductible is $500, well, that might be worth it to you, right? So for things like little dents and scratches and things like that, we usually let it ride.
Yeah. Or damage in the house. I mean, this is insurance for everything, right? So you could certainly have something happen, a water damage or something in your house, and
yeah, we had frozen pipes.
We've had frozen pipes, and so
in Arizona, yes, you can get frozen pipes. We didn't know
that. It takes one cold day.
It does.
And so
and we paid out of pocket for that.
Paid, yeah, because it was right near our deductible, and it just wasn't worth it.
Yeah, we tend to like high deductibles.
Yeah.
So only because it saves us rates, and we have an emergency fund. So if you want to learn about emergency funds and how to get one, let us know. All right, the next one is number 10. Is that you?
That's me. Number 10 are loyalty discounts. So they definitely like to have you be a return customer, and so they're going to definitely give you discounts and benefits on staying with them and carrying over with them. That doesn't negate the fact that if insurance premiums and stuff go up and things go up, but it's going to help knock that down.
Yeah, I actually think that in general, what I've seen over time is like a non-loyalty discount when it comes to it.
That's a good point.
So I feel like, yes, you can get loyalty discounts, but usually you have to do something. You have to change something up, and then they're like, "Oh, you've been with us for so long, we're going to give you a break." Or you have to tell them that you're going to move, and then they might go, "Oh, you've been here for so long, maybe we'll give you a discount." In general, what I find with insurance companies is if you stay with them long, they just continue to increase your rates. But if you tell them you're leaving, you might get that loyalty discount. So.
Yeah, and watch, because I can definitely speak to that. You sometimes when you do switch, you get kind of like a new insurer price.
Yeah.
And then the following year it starts to go up. And so that's why we are always constantly making sure, like one of the previous ones is just checking your coverage and getting new quotes.
Yeah.
Because it's, they change. And so
absolutely,
you get discounts even for being new.
Exactly. So there are so many ways that you can get good discounts on your insurance premiums. And we hope that these steps just gave you at least one that you could, just take that one less step on. And we hope that you'll join us for our next video. Have a wonderful day.
Bye.
Bye.